Hey, hope you had a nice Christmas. Really great to go into it on the back of a nice Santa Claus rally. If you haven't already, check out the Unusual Whales mobile app. It's free to download with additional features for subscribers. A link to the App Store will be in the description box below. I'd like to spend the next few minutes using a few TSM trades from this past week to demonstrate how volume and open interest interact with each other. Open interest, or OI for short, is the number of outstanding contracts that exist. Open interest does not update throughout the day. Volume refers to the total number of contracts that have changed hands throughout the course of the day. The value in the volume column will update as new trades take place. Wednesday morning, we saw a trade come in on the 127 strike calls for January 21st. The trade was for 2,000 contracts against 156 total open interest and is labeled as an opening trade. Note, throughout the trading session, there will be tens of thousands of opening trades, but only trades that can be positively identified as having been opened will be labeled as such with the formula you see on your screen. Shortly after this initial trade, another trade of equal sizing hit the tape. Note that the open interest has remained the same while the volume on the contract has increased by the size of the trade. Given that this trade occurred at the mid-price between the bid and the ask, it is not immediately clear if this second trade was a day trader closing their original position or if they were averaging up. The next day's open interest value will let us know exactly what happened. We'll take a look at that shortly. Later in the morning, another trade for 2,000 contracts hit the tape, this time on the 129 strike. Given the relationship between the size of the trade, the open interest, and the volume, we can positively identify this as an opening trade. 15 minutes later, yet another trade for 2,000 contracts hit the tape. Again, note that the open interest is static, but the volume has increased by the size of the trade. This follow-up trade occurred directly at the ask price, which, unlike the earlier follow-up trade, clearly looks like this trader is increasing their position. If we come to the conclusion that this second set of trades was indeed two purchases of 2,000 contracts each, I think we can come to the working theory that the earlier two trades were also two purchases of 2,000 contracts each and not a day trade. Again, the next day's open interest will tell us everything we need to know. As mentioned previously, open interest does not update throughout the day. Rather, you will be able to see changes in open interest in the pre-market. Your brokerage may not update open interest until the market has officially opened, but you can pull up Unusual Whales and see this information well before the opening bell. You can select the expiration date of any trade in the flow feed to pull up the historical volume and open interest values for the selected contract. If we were to pull up the historical data for the 127 strike calls for January 21st in the pre-market of the following morning, this is what we would see. Given that I'm recording this video well after the conclusion of the 23rd's trading session, volume data and the rest of the information has been filled out. Regardless, the change in open interest on the 127 strike calls confirms that the initial set of trades were not an entry followed by a quick exit, but rather a buy followed by the trader scaling into additional contracts. If we take a look at the 129 strike calls, they tell a similar story. Open interest here has also increased by a large enough value that we can confirm that the second set of trades were also a buy, followed by the trader increasing their position yet again. All in all, we've now verified that this trader is long 4,000 contracts of the 127 strike calls expiring January 21st, as well as 4,000 contracts of the 129 strike calls expiring the same day. Now, let's go back to the 22nd and examine this large opening bid-side put position. Again, note that open interest is static while volume has reflected new trades hitting the tape. We can deduce that this trader wrote around 12,085 strike puts for around $12 to $13 credit per contract. You can see the volume from this trade reflected in the table. Remember that volume simply refers to the number of contracts that have changed hands. Volume on its own is not a metric of bullishness or bearishness. In this case, there is significant volume on a put contract, but since this volume was all on the bid side, these puts are actually quote-unquote bullish. If we had examined this data the following morning, we would have seen the open interest updated as seen here. If we reviewed this contract again at the end of the day, we would have seen that there was significant volume yet again. Further investigation reveals a single 10,000 contract order on the ask side for these very same puts. If you recall the trade from the previous day, that trader wrote 85 strike puts and received a credit of $12 to $13 per. It seems highly likely that this trader is closing 10,000 of their 12,000 contract short put position at $7 a contract. We won't be able to confirm this theory until Monday the 27th in the pre-market. Look in this space here for the updated open interest value. If the open interest has dropped around 10,000 contracts, we can confirm that they've bought back a significant amount of their short puts. If the open interest has increased significantly, then our theory is a bust. If our theory is correct, then this represents a great example of why volume alone cannot be identified as being bullish or bearish. The 10,000 contracts purchased here, while seemingly bearish, merely represents the closing of a position. Following whales in this manner is only really possible when the open interest permits. If the open interest is very high, it will be hard to identify individual whales moving in and out of positions. We're heading to the last trading week of 2021. It's been a wild ride so far, and there's no reason to expect anything different in 2022. Leave a comment below with your #1 investing goal for the next year.